Hey folks, Dan Frio here with your market update for July 29th, 2024. So the news this week, basically the only thing we're going to talk about is right through here. What's the Federal Reserve going to do at the next meeting? So the probabilities are, well, I'm going to show you that here in a second. So without further ado, let's get to today's agenda. We're going to talk about the Federal Reserve, what they're going to do and what the projections are. We're going to also go over McDonald's missed on their earnings. Is that telling us the average consumer is running out of money? I think that might be. And then we're going to show you if you waited from last year to today, how much would you have saved if you were postponing your home buying from last year to this year? So that's what we're going to talk about in today's video. So without further ado, let's get to it. Mortgage rates eased off on Friday, ending last week's session at 6.86. Are these rate drops going to continue? Well, that's going to depend on right through here, what the Federal Reserve does at the next meeting. So let's go over the economic calendar for this week, and then we'll take a deep dive in the Federal Reserve's news. So right now we have nothing coming in on Monday. Tuesday, we have the consumer confidence coming in, the JOLT index, how many job openings there is. And then on Wednesday, we have the ADP numbers, and then we have what the Federal Reserve is going to do. So right now, the probability that the Federal Reserve will raise rates or reduce rates or just pivot is right over to here. So we're going to go to the CME FedWatch tool. What is it? Well, basically, it's a tool that tells us what the heck the Federal Reserve is going to do at the next meeting, and they're meeting in 2 days. So some people said, Dan, you don't know how to read this chart. Well, I do, but these numbers change on a constant basis. So let me go through this chart with you one more time so you guys understand this. This is a tool that the Chicago Mercantile Exchange puts together, and it gives us what the probabilities that the Federal Reserve will change the federal funds rate, the rate they control at the next meeting, or basically for the next year. Okay, so here's the chart that we're seeing. So I'll put the link down below, but what I want you guys to understand is right through here. The top line through here that you're seeing, this is the federal funds rate. Okay, this is the rate that the Federal Reserve controls. Right now, the federal funds rate is 5.25 to 5.5. Okay, but here's the probabilities of them dropping it all the way down to 3%. Okay, and right through here is the meeting date when the Federal Reserve meets. Okay, so what you're seeing right through here is it's saying at the July 31st meeting, there's a 0% chance they're going to cut rates to 4. A 0% chance rate, they're going to cut rates to 4.25. I don't have to go all the way through this, but a 4% chance they're going to cut rates to 5, or a 95.6% chance they're going to keep it right where they are at the 5.25 to 5.5. Okay, but now it's saying at the September meeting, there's a 0% chance it's going to stay there at the 5.25 to 5.5. That's going to be dropped. It's going to go from this column over to this column, which is a reduction. So now there's a 90% probability or an 89.6% probability they're going to cut rates from 5.25 to 5 at the September meeting. Now it also goes over the November meeting. There's a 59% probability they'll cut rates from 5 to 4.75. And you can see the probabilities all the way through here. So for example, it's saying next July, there is a 0.6 probability that the federal funds rate will be 3%. Okay, now this changes throughout the day, every day, and it progressively goes through. So you can use a whole bunch of combinations up here. You can see what the current yield is, and you can go right through here. You can pick up the July one. So again, it's 95.9 probability that it's going to stay at the 5.25 to 5.5. Or you can go click the September meeting, and it's going to give you its 89.6 probability that it's going to be at 5. So it means a cut from 5.25 to 5.5 down to 5 and 5.25. So I hope you understand how this chart works. So it meets, basically it's giving you the same dimensions if you click the current and then change the dates or go through here. So let's not beat that dead horse. Okay, so here's the problem though. We have the McDonald's not hitting its earnings, but we have this is kind of an anomaly in the background. Okay, this is how much consumer disposable income the average American has. Now, this disposable income means how much money you have left over after you pay your bills. You might be saying, Dan, that's a pretty big spike during those time frames. Well, if you expand this out over time, look at this anomaly. Okay, so here's basically our savings rate throughout the country over the last, basically 50 years. Back in the 1960s, people tried to start saving some money, and they had an average of $2,000 in the bank. Okay, so then you go through here and you go through up, and it's a constant savings rate. Then all of a sudden, back right around 2020, what happened? Well, let's go take a little bit of a glimpse at that. You're going through here, stable, then bam. Well, during this time frame, we had COVID. What happened during COVID? Well, the big things that a lot of people don't realize we had was you had a moratorium on foreclosures, so people didn't get foreclosed on. You also didn't have to make your student loan payment for about 3 years. So people didn't have to make those student loan payments. And then another thing that a lot of people don't realize, if you had a mortgage and it was secured by Fannie Mae or Freddie Mac, you didn't have to make a mortgage payment. So imagine if you didn't have to make a mortgage payment and you didn't have to make a student loan payment. Now you didn't have to verify anything or anything. You just had to call your mortgage company saying, I'm affected by COVID, I can't make my payments. And most people did that, even if they needed to or not. And that's how you got this huge rise in disposable income. Okay, so this is also the same time frame we had supply chain issues. So you have supply chain issues, you have difficulty getting stuff, and then you have people with more money than they ever had in history. And it's right here, folks. This is by the Federal Reserve. So inflation rose dramatically. And then what happened? Well, all of a sudden, all prices like McDonald's and all these companies kept raising their prices and raising their prices and raising their prices. That caused inflation. Well, now you even have McDonald's missing out on their earnings. Why? People are broke again because we had the disposable income here and then it just plummeted. So people are kind of back to where they were pre-pandemic. So if we go back through here, look at this. Kind of the cool thing is, if I take my head out of the way, well, let's just go to a 10-year chart. If you look at this, the trajectory right through here, and you go through here, and you just wipe out this whole section through here, okay? And you just continue to move over here, we're kind of on the same trajectory, but you take out this equation. So this is telling me Federal Reserve did a pretty good job with that. Okay, so that's what you're looking at in that section right through here. Okay, so now the next thing I want to talk about is if you would have bought a house last year, a lot of people put it off, and they're waiting for that housing crash in the values. Well, you didn't see it, okay? But unfortunately, the good news is a home's got a little more affordable when it comes to interest rates on your mortgage, okay? Why? Mortgage rates hit last year in October 8%. Okay, where are they today? We can see rates right here are at 6.86%. How much of a savings would this be to you? Well, you also see home prices. If you go through here, what I did is I said, how much did the average home price change? Didn't say go up, go down, crash, change from 2022 to today. Well, the way it answered this was kind of weird, but I'll go with it. It's basically saying from April of 2023 to April of 2024, home prices went up 2.4%. That's kind of an average, okay? That's a normal average that homes appreciation usually sees. Okay, so if you go into our charts, and we have a whole bunch of mortgage calculators, and you go through here and say, well, if I would have bought a house back in October at an 8% rate, which you're seeing right through here, versus today's rate, what would my mortgage payment have been, and what would it be today? How much of a reduction in my payment did I get because I waited on the sidelines? Well, again, the unfortunate part, you saw a 2.4% increase in prices nationally. Now, your market might be down a little bit. Your market might be up a little bit. So it depends on the market that you're in. But if we go over through here, most first-time home buyers, what they're required to do is put down, or what they are doing, is they put down 3%. So let's analyze what your mortgage payment would have been last October versus would be today, assuming no appreciation in homes. Okay, so you see October of 2023, I'm putting down 3%, my rate's 8%. If I bought today, July of 2024, I'm putting down 3% and my rate's 6.86. What's the difference? Well, let's go down in the payment. You would save $33,000 over a 10-year period because of this lower rate. Let's go down through, and how much of a differential is it? It's right through here. So I'm gonna scroll up a little bit. The payment at the 8% would be $2,766. The payment at the reduced price, or the reduced rate, is $2,537 for a savings of what? And I put it in Chat GTP. If my payment went from $27.66 to $25.37, my payment would have went down 8%. For those that sat out there and waited until now, you did a good job. But it depends on what your home prices have done. Okay, so it changes all over the country. So where are we today right now, or what's my expectations this week? I'm expecting the markets to be completely flat. Let's go to the CNBC to see what the stock market's doing. It was up a little bit earlier. We have the Dow Jones at minus 95, S&P minus 6, NASDAQ 26. So nothing going on there. Cryptocurrencies are flat as well. And then oil, let's check at oil. Oil's going on that trajectory down. That's good news for us there. So basically those are, let's say, stagnant, what I'm expecting. So I'm expecting basically nothing to really happen. Let's go over to the MBS market. Like I said, and we have MBS is basically flat at 0. So mortgage rates aren't changing at all today. I'm really not expecting them to change much in the next 2 days, waiting or anticipating what the Federal Reserve is going to do. So if you want to kick the tires to see if you qualify for a house, or maybe you close back in October and these rates can save you a couple $100 a month, you might want to do that. So don't know, but I don't know your financial position, but if you're out there trying to see, can I qualify for a house, Dan? I got the money. I can make those mortgage payments. I might be struggling with the down payment or closing costs. Well, check out the Grand Finder right there. That's a solution for you there. But if you're out there trying to kick the tires, please, all I ask you is don't disqualify yourself. Okay, don't disqualify yourself. Reach out to us. We'd love to just answer questions for you. And if you're prepared, great. We'd love to keep moving with you to get you pre-qualified. If you're like, Dan, it's just not the right time for us, God bless you. All we want to do is we're here to help assist you kind of making that decision based on your finances, your credit, and everything else. So how do you reach out to us? You can go to therateupdate.com. Step 1 is you can click the Apply Now button right through there, or you can just scroll down right down to the bottom and find our 800 number as well as my email address, and it is right through there. Our 800 number is 844-775-5626, or you can reach me at dan@therateupdate.com. Thanks so much for watching, guys. God bless. Have a fantastic day, and I'll be back at the closing bell to let you guys know if the market's moved or not. Take care. See you then. Bye-bye.